a nightmare. When you're doing this, the market will keep taking your money. The market's probably not going to turn around when this is happening to you. Close your trades. Respect your stop loss. There's a reason the stop loss is in there. The only trade that I can look at in the last 2 months that I actually feel that I made a mistake on, and I had a lot of losing trades, the only one that I feel I made a mistake on was when I moved a stop loss on a trade that had kind of turned around. I thought that we were in a retracement, but going into the Asian session, we had low volume. I moved the stop loss. Huge mistake, because we leveraged our risk based on a certain percentage or on a certain amount of pips. Moving that stop loss violated my money management rules. I'll never do that again. Okay, here's an example of 3 simple trades. Now these are not real, these are hypothetical, as you can see by the numbers. These are examples using one standard lot. I'm going to use the exact same numbers on every single one of these examples. I'm going to show you 3 examples. The first one is a standard lot. You can see that we lost 250 pips. We had a 250 pip stop loss, a 100 pip stop loss, and a 15 pip stop loss on these 3 trades. You can see that, right? You can see your entry and your stop loss. A 250 pip stop loss, a 100 pip stop loss, and a 15 pip stop loss. Okay, we also had 2 of these stop out, and 1 of these went to a 48 pip gain. Okay, now what happened here? This one lost, and it lost since we're on standard lots, $10 a pip. We'll just say it's standard $10 a pip. We lost $2,500 on one. On the second one we lost $1,000, and on the third we made $480. This resulted in a negative 302 pips in our account, a negative $3,020, and a negative 30%. Okay, this is a huge loss. In fact, after these 2, I would have stopped trading. When I get down to negative 20%, I stop trading and I refund my account and figure out what I did wrong. Okay, here's an example of the exact same trades with a mini lot. You can see these are all exactly the same. 15 pip stop loss, 100 and 250. And we're not so bad this time, right? We're using like one mini per. So we have a loss of $250, $100, and a positive $48. I can live with this. It's okay. It's not as bad as the other, right? We still have a negative 302 pip loss. In our account. We also have a negative $302, and we lost 3.02%. That's no big deal. Now, that's okay, but can we win having lost 302 pips? Can we possibly win money? Absolutely. Using money management and simple money management. I use a little bit more advanced money management system, like I said. Hang on. Sorry. But even just using the simplest money management, this is a winner. Here are the same 3 trades, as you can see, using a money management. We're risking 2% on each one of these. Okay, we're risking 2%, so we lost $200 on this one. We lost $196 on this one because our equity changed. Okay. Every trade starts at a different equity. And then we gained $614 on this one. Why did we gain $614 on this trade? It's only a 48 pip gain. Well, because of money management. We're risking 2%. We're risking 2% of our account equity, and then we divide that by the number of pips in the stop loss. The number of the pips in the stop loss in this is 15. So we're gambling we're gambling a lot more money per pip here. We're looking at, hang on just a second. It's about $12 a pip. So this is why money management is so powerful. We had negative 302 pips. We had a growth of $218 in our account on these 3 trades, and an increase of 2.18% in equity on these 3 trades. Now, anybody can see that using proper money management really is what is going to save you, and it's going to make you successful as a trader. Nothing else. I don't care how good or bad your system is. This shows you that a horrible trading system, well, this is a terrible trading system, by the way, if you had this, But even with a horrible trading system, money management brings you out ahead. This is the difference between a professional trading and failed trading, and amateur traders. Okay, now let's go on and take a look at the next slide here. Okay, now I'm going to give you an assignment. I want you to apply a very simple money management system, the very simple money management rules, very typical, to all of your trades from 2009. 3 rules. I want you to apply 2% risk on every trade. Now this is 2% of your account equity at the time the trade starts. Hang on, sorry. If you lose 20% of your account, you must stop trading until it's refunded and you've figured out why you're losing. And after a loss, the next trade must have a stop loss not more than 50% of the previous loss. Okay, thank you very much, and we will talk to you later.